Fears of a possible recession in the United States economy eased following the release of the GDP report and the earnings reports presented by U.S. corporations. They proved that consumption and business activity remain high. In the light of the fresh data, the U.S. Federal Reserve may decide to continue raising the rate, and the final decision will be announced at the FOMC meeting this Wednesday. So let's discuss how the foreign exchange and commodities markets closed last week amid such investor sentiment. The US dollar index, which measures its value against the basket of 6 major currencies, ended last week close to the opening level of 101.60. Most analysts assured that the Fed will raise the rate by 25 basis points on a Wednesday. Actually, these expectations have already been priced in by the market. Traders will be more focused on the press conference during which the Fed chairman may give some clues about whether the regulator is going to continue, pause, or is its monetary policy. Jerome Powell's rhetoric will set the direction in the financial markets in the medium term. As for the European Central Bank, its plans are clear for now. The regulator is expected to introduce another rate increase at its next meeting, and the only question is whether this will be a 25 or a 50 basis point rate hike. Market participants anticipate that the central bank will stay hawkish in the future, in addition to central bank officials calling for higher rates and tougher measures against inflation. And the International Monetary Fund also appealed to the ECB to go ahead with the rate hikes. That's why investors favor the European currency and believe in its upside potential, yet the euro-dollar pair closed last week without notable changes. Meanwhile, the Bank of England is also likely to stay hawkish. Last week, the pound-dollar pair saw a sudden bullish run. At the start of the US trading session, the price broke above the resistance level of 1.25. Apparently, such a move was caused by consumer spending data released in the United States, which reinforced expectations that the Fed will end its rate hiking cycle. The US macroeconomic data also encouraged the yen traders as the dollar-yen pair returned to a 7-week high. Last week, Kazuo Ueda held his first meeting as the new governor of the Bank of Japan. The Japanese regulator kept its ultra-loose monetary policy unchanged and made no adjustments to yield curve control. At the same time, the central bank said it was ready to cancel some guidelines that promised to keep interest rates at the current low level. The yen has not reacted to this information yet. Oil traders also welcomed the prospect of a pause in the Fed's monetary tightening. Brent crude was on a track to close the week with a 5% decline. However, it managed to recover part of its losses and closed the week just above $80 per barrel. It seems that oil was supported by optimism about the resilient US economy and the global economy in general, as demand for energy will most likely stay strong. As for gold, it added a modest 0.34% last week, as traders stayed in a wait-and-see mode ahead of the Fed's meeting this week. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon!